Hey there everyone, this is Joe from Bullion Now, bullionnow.com.au, selling you the best bullion bars and coins shipped to you worldwide from Melbourne, Australia. This is your weekly precious metals technical analysis where we take a look at the big four: gold, silver, platinum and palladium, and occasionally the gold to silver ratio too. Of course, head over to bullionnow.com.au. Online store is coming very soon now, so I hear. That's the word on the street. But in the meantime, you can give us a call Australia-wide, and you can send us an email if you prefer email, or if you're international, of course. And you can come and visit us in the store, buy over the counter if you're really, really local. You do want to subscribe to the channel, you know what to do there. Hit the big red subscribe button, youtube.com/bullionnow. Follow us on Instagram, instagram.com/bullionnow, particularly all you international people, because we post really, really good stuff that seems to be snapped up by all you internationals on a very, very quickly, I should say. And lastly, head over to facebook.com/bullionnow, because we're really trying to push that right now. So we're going to post quite regularly and do Facebook only promotions as well. So you can only get those sort of specials and discounts by being a Facebook liker of our page. So here we go. Last 7 days has seen a nice little rise in all of the metals. Some slightly more than others. I'm still going to keep it in my 50-50 on the fence status as of last week. So last week I upgraded the status from 51% to the downside. I thought there was a 51% chance that we might see lower prices from here. But I changed that last week to a 50-50, just right on the fence, unsure, neutral stage. Now, in the last week, we've seen even higher prices, but I'm still going to say we're in the 50-50 range at the moment, even though in gold, for example, you can see right here, we're creeping towards the not so neutral, but still neutral at this stage. But let's have a quick look at what happened over the last week. Here we are on the daily chart, I should say. This is the tradingview.com website, priced in US dollars, of course. And we just count back 7 days. 1, 2, 3, 4, 5, 6, 7. There we go. We had yet to break through this little trend line right here. And I was going through a couple of key low points. So let's have a look right here. As you can see, this trend line was going through the old low of about 1,050 and this level here of about 1125 in US dollar terms. We tried to break out through it once, but it was a failed move. But now we have since broken back up, and we're really edging towards this top end right here, as you can see. Let me pop into the weekly, is probably a better idea. As you can see right here, this level, there we go. Let's get that. That's much better. All right, as you can see, a very significant level of resistance through very many points here. So of about $1,370, we are creeping right close to it right now. So I think potentially we could break through it. I'm not saying that we are going to, of course. But we also need to take a look at the relative strength index that's down here right now. When you're in this kind of territory here, you're in oversold territory, which could potentially signal lower prices coming sooner rather than later. And when you're in this territory right here, it can potentially mean, which is the overbought territory, it can potentially, not always, but potentially mean, it's in overbought territory, which means, higher prices could come sooner rather than later. So as you can see, right, we go from, we came up to here, went from overbought when we were at around about this stage, and then it went through overbought. So then we saw that price rise right here, and that's when we became into oversold territory, and then we saw that dip and all the way back down. So it's, while not a hard and fast rule, it's a pretty good indicator of the relative strength index. And we're just coming into oversold territory now, but we're not over the hump. We haven't seen the curve over just yet. So potentially, what we could see, or let me put it another way. What I would like to see, what I would prefer to see in order for me to eventually give a bias to the upside that we're in, maybe a new bull market, 51% chance at least, we want to see it break above this level of 1370. The next significant level for me personally is right here at approximately $1,430, because that's intersecting with a couple of key levels right here and right here. So I think, the perfect scenario, in my opinion, would be a continual move up to approximately this area of 1430, which is a clear break above this 1370 level here. And then a nice healthy retracement back down to this level, and then a continuation up. If we were to continue up from here, which would really put me in a good mood for gold, we would then see a level of approximately, I think, the $1,500 psychological value, which is at approximately right there. That's where I think we would come up to. If we came up to the 1430, back down, we might come back up to the 1500 level. And then the next level above that is a Fibonacci level at about 1540. Let me show you that on the monthly time frame. Always good to zoom out every now and then. This Fibonacci analysis is taken from the very, very high and the very, very low in recent times, $1,920 US, down to that old $4 roughly, wherever that was. I know, what a great day that was. Not $4, so $254, not $4, $254 back in, what was that? March of 2001. Is that 254? Yeah, it's not 4, is it? No, we're talking gold, not silver. So 250 of that low. So you can see that Fibonacci level right here. That's the 78.6 Fibonacci level, and that's sitting at approximately $1,560. So that's what I want to see for a healthy move, would be, again, up to the 1430, back down to this old high, and then back up to about 1500. Now, I'm not saying that is going to happen, of course, definitely not saying that is going to happen, but that's what we would like to see. And if we have a look on the monthly time frame with the relative strength index down here, we're just sort of skirting the edge of overbought. We haven't gone into really overbought territory. So I think there is room to move higher from here. Of course, that is not financial advice, but I'm still keeping it at a neutral bias for now. Let's pop over to silver. Now this is silver on the monthly time frame, and this is where I was getting confused just before about my Fibonacci levels. Here's the old high of about $50 and the old low right there of about $4. And right here, we've been just skirting around that kind of 1480, 1450 level. We've had a couple of tests down here of that $13.80 level. We're back up above 15. Still not calling it, new bull market just yet. We're not in that territory, but we've seen a nice little healthy move back up past the $15 range. Let's pop into the weekly. And that's where we are. As you can see, I think we've just popped back up through that $15 level, $15.15 level. I think we've got a little bit higher to go before we see a nice little healthy retracement. Let's go back to the daily and see where we were last week. 1, 2, 3, 4, 5, 6, 7. Yes, we hadn't even broken above the Fibonacci level again of about 1485. We did break through. It was a failed move, so we had a fast move to the downside, but now it tried to break through, and it did once again, and it had a level of support as well, which is perfect. That's exactly what you want to see. So now we are slightly on the daily time frame here. You can see relative strength index, we're on the slightly overbought territory, so I wouldn't be surprised. It wouldn't surprise me at all if we had a little move back down, maybe to the 18 average of highs right here at approximately, the $15 mark right there. Wouldn't surprise me if we went back down to 15 before continuing higher. I think we could continue higher from here. That does not mean that we're in a bull market, just talking in the very short term. The next level I would expect to see us rise up to, if we're rising up from here, would be around about here at about $15.50, $15.60 roughly, before we see a healthy retracement back down. To be really confident, and I probably mentioned this last week, but to be really confident that we're moving in the right direction, you do want to see a clear break out of that $16.20 move, and very much so that next level here of approximately between 21 and 21.50 is the big level, the big level right here. As you can see, it's even a Fibonacci level from the old high and old low. We do want to break above that. But that's, I think, it could be coming soon, but I should say we are just 50-50 on the fence as of right now to where all the precious metals are going, but we're going in the right direction, which is good to see. XPD. We've been talking about, again, this triangle pattern right here. We're still within that range. It looked like, actually, just the other day, it looked like we may have broken down through it, but we've seen a nice rise back up. So as you can see right here, 1, 2, 3, 4, 5, 6, 7. As I was expecting, we may have seen a test of this trend line. We certainly did that. And as you can see, it was a failed move. And oftentimes from failed moves to break down further comes a fast move in the opposite direction. So we could be heading that way. We've definitely been hanging around this bottom end of this triangle pattern right here for quite some time. So I wouldn't be surprised, because of the direction of the direction that the other metals are going. I wouldn't be surprised if we headed back up to here, about 830, and the next level we'd see is probably about 850 to 875 roughly. But this next move, before we see another little retracement, could go all the way up to about 830. So like the others, definitely not out of the woods. We're definitely in, say, a 50-50 neutral territory in terms of the macro view of where the prices are going. That's platinum. Now, lastly, palladium. Look at this baby go. Woo! Look at palladium. It's had a nice little tear. I haven't looked into what's going on with palladium, like news, the fundamentals. If someone wants to do that research and post a comment below, you are more than welcome to. Please do. I just don't have the time. But in terms of the technicals, it's looking really good. But again, I'm not saying we're in new bull market territory for palladium, because I'm thinking about the other metals as well. But we've certainly seen a very clear break right now. It looks like we're on the weekly time frame. Check this out, right? So we've broken back up through this level here of about 1470. We've broken the $1,500 mark right here at 1503. And at least you can see on the weekly, it looks like we're pushing to go higher. And the next level I would be looking at on the short term, and we're taking the high of 1615, 1620 roughly. Let me get rid of that. And this interim low here of about 1270. The next Fibonacci level is the 0.786, and that's at about $1,540. So I would not be surprised if this next little leg higher takes us to about 1540 before we have a retracement. We need to have a retracement at some stage, but take a look at the weekly on the relative strength index as well. We've just been right through here for a while now, from about the middle of April to approximately, the 10th of June roughly. We've been in overbought territory for quite a while. That's on the weekly time frame. So we're just getting into sort of that more neutrally kind of territory there. I would expect to see a test of at least 1540. Of course, that's not financial advice. We could certainly go straight back down from here. But more likely than not, I think a test of 1540 before any kind of retracement. And because we're still in the just getting out of overbought territory, you could even see a test of that old high of 1615. I'm not saying it's going there though, but you never know. It wouldn't surprise me. I wouldn't be ripping my hair out with surprise if it did. So let's pop out just quickly to the monthly and see where the relative strength index is just there. Yeah, look, as you can see, look at the old high of 1100 roughly, that old low of about 150, and as you see, we broke through there, made that new high of 1620. Yeah, look on the monthly time frame, come off an oversold territory. As you can see, we came off the old high of 1615, 1620, and it's going back down into neutral kind of territory right there, kind of just half between oversold and overbought. Could this still be the dead cat bounce? Look, quite possibly. Could we see lower prices from here and come back to visit the old high of between 1150 and 1100? Yes, we could. So I'm not saying we're out of the woods. So 50-50 chance with palladium as well. And lastly, let's just take a quick look at the gold to silver ratio. It hasn't changed much, but here we are a little bit below 90. If you don't know what I'm talking about the gold to silver ratio, you've got to get yourself educated, because at these gold to silver ratio prices, silver is the best play out of all the metals. Personally, in my opinion, not financial advice. Look at that really high level. It's been as high as 1 to 100. You just can't see that on we don't have a historical historical chart. But if you popped one up, you could see it's gone to 1 to 100 of a price difference between gold to silver, which tells you when the gold to silver ratio is going higher, that means silver is the better play because you have all this room to move down where the gold and silver price gap is narrowing and getting closer and closer to each other. So what you do is you buy silver when the gold to silver ratio is high, you wait till it drops to a price that's right for you, to a point that's right for you, and then you swap your silver for gold, and you'll have more gold in your hands than you would have had if you had just bought gold the entire time. If you don't care about silver, if you hate it, if you loathe silver, it's the worst metal in the world, you would, rather sell your grandmother than buy silver. Buy silver now and wait till the gold to silver ratio drops to a level that's right for you. Could even go one day. You never know. You never know. It could go back down to this old level of about 31. Imagine buying at, let's say, 1 to 90, buying silver and then swapping it for triple the amount of gold that you would have had if you had bought gold, here instead. So if you don't know what I'm talking about, I do go into more detail in this video right here. Where is it? Gold to silver ratio. Why is the gold to silver ratio so important? Watch that video right there. It goes into more detail about why you should be buying silver right now versus gold. And that's it. Of course, you should hit the big red subscribe button on YouTube. Join the family. You know you want to. Weekly auctions, precious metals, technical analysis videos. Watch this video right here, how to buy gold and silver and platinum as well at spot price. You can buy metal at spot price from us through our unallocated program, and we answer some of your frequently asked questions about the program in this video too. We do Perth Mint Epic unboxings. We do specials as well. Here's a gold special we did for Spot Plus 20. That was about a month ago. So we pop these up on our YouTube page for YouTube subscribers only. And you do want to follow us on Instagram, as I said before, instagram.com/bullionnow. Follow us on facebook.com/bullionnow, and bookmark the website, as I said before. Website coming really, really soon. That's it, gang. Stay safe, and we will speak to you soon.